now. Okay, so obviously Brexit had a lot to prepare for, and we have quite a few of these sessions before Christmas to kind of get everything in order to be ready for the challenge ahead. But then there were some situations that presented themselves that we couldn't really prepare for, like the concept of free circulation goods leaving the EU and trying to come back again. That's kind of presented some complications. So thankfully, Declan and Breda from Revenue Customs are here today to try and help us understand return goods relief, and more importantly, the appropriate procedures to use when claiming that. So Breda will go through the technicalities of the presentation, but before that, Declan would like to say a few words to everybody. So thank you both for joining us today. I'll kick off with Declan, please. Thank you.
Thanks, Seamus. Can you hear me?
Yeah.
Perfect. Look, thanks for the invitation, Seamus and Tom, to give us the opportunity to present to you today and to your members. Just take 2-3 minutes, just a quick introduction to Breda's presentation. My colleague Breda and Caroline O'Keefe are on the call today. Breda is the manager of the release and authorizations team in NENA, and Seamus said she'll give the presentation today on returned goods relief. There is a lot of information available on the Revenue website on returned goods relief in relation to, there's e-customs notifications there, which you may have seen, and there's a full explanation in relation to how the relief works. Guidance has been provided to us by the European Commission on returned goods relief, given the level of interest across the EU on the relief, and especially I think when returned goods relief under the Union Customs Code was first introduced, there was no expectation that the UK would be leaving the EU at that time. So there's intricacies there in relation to how the relief can be managed. There are still issues which haven't been fully resolved despite the guidance from the Commission, and we're in contact with the Commission and trade to overcome those. So basically, and I hope I'm not taking from Breda's presentation here, but basically it's a relief under Article 203 of the UCC. It's EU legislation. There are conditions attached to claiming the relief, and there's proofs attached to address those obligations. And that's where some of the difficulties are arising. So Revenue will, as we do in all aspects of tax and customs, we will operate on a presumption of honesty. That's our approach to the importations claiming the relief. But every effort must be made by the trade to adhere to the conditions attached to the relief. And I suppose not only are we concerned that you adhere to the conditions, that trade adhere to the conditions, but we're actually audited by the Commission on an annual basis to ensure that we are following up with you in relation to the conditions under the relief as well, just to make sure that everything is being addressed accordingly. So we've had some engagement with your members recently in relation to the importation of cars under returns goods relief. And while we have no issue in talking about cars and return goods relief today, hopefully we'll avoid the intricacies of recent correspondence, but absolutely happy to continue that outside this forum, of course. Breda will give the presentation, and there's contact details there if any further contact on the relief needs to be made. But I'd certainly urge you to look on the website first to ensure that you've read that. So on that note, I'll hand over to Breda to go through the finer details of the relief with you. And certainly when it comes to the Q&A session, we'll come back in at that stage.
Great. I think Seamus is going to share, just have a couple of short slides. Good afternoon, everyone. My name is Breda Kennedy, and I work in Authorisations and Reliefs Unit in Customs Division. And I suppose we have responsibility for the policy issues relating to return goods relief. So before I start with the slides, maybe as Declan mentioned, I suppose return goods relief is provided for under the UCC. But I don't think it was ever the intention that the relief would be used to claim, so much relief on the volume and the frequency of movements that we're talking about the goods moving from the EU via the UK back into Ireland. But Brexit has brought so many changes, and I suppose that's just one of them. So in some instances, it seems like that, it's difficult to match the conditions with these volumes and frequency, but we're trying to work through them. And maybe if I could just quote from, I suppose, recent correspondence we got from the Commission on this relief, and they stressed that the European Court of Justice considers that the suspension of customs duties is an exceptional measure intended to facilitate certain economic activities. Since this involves a risk for the correct collection of duties, the beneficiaries of regimes involving the suspension of duties are required to comply strictly with the obligations resulting therefrom. So it just gives you an idea, I suppose, of where the Commission are coming from on this. And like we accept it's difficult for some of the business models resulting from Brexit to comply with conditions for this relief, but we have to ensure the correct application, and we are working currently even with a lot of companies to try and determine how they can produce sufficient evidence to claim the relief. So as Declan said, I suppose it's currently it's a topical issue in the Commission. It's under discussion at the moment. There's guidance being drafted. So, we're working our way through on the relief. But I suppose I'll start with the first slide then. So goods can be re-imported into the EU without payment of customs duty, provided all the required conditions for return goods relief are met. These goods must have been originally exported from the EU and re-imported to the EU within 3 years and returned in the same state as they originally exported out of the EU. Now, I suppose we've had numerous questions on the returned in the same state. It can be difficult to confirm that the goods have returned in the same state, and the evidence can vary very much depending on the types of goods and the business model. So, for example, in some cases, the CN code might be enough to provide this evidence that the goods haven't been altered. Then we have a lot of business models where the goods, it's possible to track them moving into the distribution centre in the UK, shown as just storage, and then coming back into Ireland. Or often what we're finding is some sort of identifying number, whether it's a batch number, a serial number, or whatever the company can provide. That can also assist, I suppose, in providing that evidence. But really, I suppose the onus is on the company with their business model to come up with a suggestion of how they think they can provide that particular evidence to show us that the goods haven't been altered. Another consideration is that the goods can't be exported for repair under return goods relief. It's okay if they break down, if it's a machine and it breaks down while they're in the third country, they can be repaired to bring them back to the condition they were in when they left the EU, but they can't kind of leave the EU broken to be repaired in the third country and come back in under return goods relief. The next point on the slide there is VAT relief only applies if the goods are re-imported by the same person. And I know some of your members have had question around that VAT relief. So really, I suppose what I should say there, VAT relief can only apply if the goods are re-imported into Ireland by the same economic operator that originally exported the goods out of the EU. So an example that a member had put was if Joe Bloggs France exports goods to the UK, and then Joe Bloggs Ireland imports the same goods from the UK back into Ireland, what is the situation there? And I suppose the answer is it really depends on whether those two companies are separate legal entities or not. If they're two separate legal entities, the VAT relief won't apply. The customs relief can apply, but not VAT relief. Now, we got some advice from VAT unit on it, and we're advised that a subsidiary is an independent person separate from the parent company, so they wouldn't qualify as the same economic operator, whereas a branch, on the other hand, has no separate legal personality, so they would likely qualify for the VAT relief and the customs duty relief. So really, I suppose, the answer is that the legal status is the determining factor. So it's the legal status of both companies that would have to be looked at. The final point on that slide, the return goods relief is claimed on a standard import declaration meaning full import formalities, including risk analysis, examination, presentation of licenses, etc., apply. Where goods that are subject to SPS requirements have been exported from the Union and subsequently re-enter the Union, they will be treated as an import from a third country and will be subject to full import controls. So really, I suppose what we're saying there is these EU goods, they've lost their EU status when they go into the UK. So it's an import declaration declaring third country goods back into the EU, and all customs formalities apply in that case. I know there was a question as well around the declaration process for claiming the relief. Now, I'll just give a very brief summary of the process. It's all on the Revenue website for both AEP and AIS. And what I'd mentioned to Seamus is I will do up a document after the Zoom with the questions and answers, and I can send it on to Seamus for it to be circulated if that's of any use. But the declaration process is, I suppose, the procedure code that would be used is either 6123, which is re-import after temporary export, or 6110, which is re-import after permanent export. This is now an import declaration for the goods returning back into Ireland. So that procedure code is entered in either box 37A of AEP or data element 110 of AIS. Then there's an additional procedure code, and this depends then on whether you're qualified for duty and VAT relief or just duty relief. So if it's just duty relief, you enter F01. If it's duty and VAT relief, it's F05. And they're entered in box 37B of AEP or data element 111 of AIS. And then finally, you enter code 1Q27. And after that, you'd enter the MRN of the original export declaration. That's the export declaration when the goods were leaving the EU, or else the reference number of your INF3. And they're entered in box 44 of AEP or data element 23 of AIS. So all that information is on the Revenue website. So it's a normal import declaration, but you're claiming the relief, and it's subject to you being able to provide the proofs that you qualify for the relief, which I suppose we'll be going into if I move on now to the next slide, actually. So this is really talking about, I suppose, what's causing that problems, the documentary proof that's required by Revenue when the goods are being re-imported into Ireland. So the first documentary proof we're talking about is the export declaration. So if the goods are originally exported from a member state other than Ireland, the export declaration has to be certified by the customs authority of that member state. So I suppose, like if it's exported from Ireland, we have access to the export declaration. So if you provide the MRN, we can see all the details of the goods that were exported. But if the goods are exported from another member state, we don't have access to their declaration system. So in accordance with the UCC, the export declaration should be printed down and stamped by the customs authority of the member state where the goods were first exported out of the EU. So that customs authority has to certify the export declaration. Now, our second proof there is the return goods information sheet. It's called the INF3. And that would be completed by the competent customs authority in the exporting member state if the goods were originally exported from a member state other than Ireland. So if you're using the INF3 as proof of export, it's issued by the member state where the goods were originally exported. It's a paper form. It's filled out by the customs authorities of this member state, and it's signed off by them. Now, there was a question from some members about, who is the competent customs authority? And so in each case, really, I suppose the competent customs authority is the customs authority who has responsibility for that particular declaration or procedure or relief. So again, I suppose if we just take an example, if goods are exported from France to the UK and re-imported into Ireland, claiming return goods relief, the competent customs authority for issuing the INF3 or export declaration is the French customs authority, whereas the competent customs authority for authorising or monitoring the claim for the return goods relief is the Irish customs authority, because it's here the relief is being claimed. So I mentioned the declaration process earlier. The MRN or the reference number of the INF3. So the MRN of the export declaration or the reference number of the INF3 should be quoted on the import declaration when the goods are being re-imported into Ireland. And this documentation should also be available at point of import if requested by customs. Now, the majority of the check-in of compliance for return goods relief will be done in a post-clearance environment. But if stopped at customs, you have to be able to produce the proofs to show that the goods qualify for the relief. Now, the re-import declaration, it doesn't have to be for the exact amount, weight, or value of the goods that were originally exported or on the INF3, because there could be a number of shipments re-importing the goods back into Ireland that were on one export declaration or one INF3. And it could also work the other way around, that there could be many INF3s or export declarations referenced on the one re-import declaration coming back into Ireland. So they don't have to match. Now, I know we had a question that was submitted in advance from a member as well about a message received from customs when claiming return goods relief. And that message indicated that the amount, weight, value of goods being imported must match the values being exported or the difference clarified. Now, I suppose just to confirm that the goods weren't stopped there because the amounts and that didn't match. It was just that it hit the return goods relief profile. So the goods were stopped for the documentation check. So there isn't a problem if the amounts and weights are less than what is referenced on the INF3. The problem only arises if the relief is being claimed for more goods than were originally on the INF3 or export declaration. So again, I suppose if I just provide another example that was put to us by a member, if a company exports 100 boxes from France to the UK, 90 boxes remain in the UK and 10 boxes are re-imported into Ireland from the UK. So if the company knows in advance that only 10 boxes will return to Ireland, the INF3 should reference those 10 boxes. However, if at the time of export, if the company doesn't know how many boxes will stay in the UK and how many will come on to Ireland, the INF3 can be drawn up for the full amount of 100 boxes that are being exported. And so the INF3, I suppose, it's used to provide the information, that the conditions of the relief are fulfilled. So the relief can be claimed on either all of the goods included on the INF3 or just a part of them, subject to all the other conditions being fulfilled. So I think that might be something that's useful, because I think at the time of export, originally from the EU, a lot of companies don't know what's going to move on to Ireland, what's going to be released to free circulation in the UK. So you can have your INF3 drawn up. You don't have to claim the relief on all of the goods that are on the INF3. The important thing is you cannot go above what's on the INF3. As well, like under the UCC, it is possible for the Customs Office of Export to issue an INF3 after the goods are exported. So the exporter can go back to the customs authorities where the goods were originally exported from the EU and request an INF3. I suppose the condition is that once the information about the goods in the exporter's request corresponds to the information about the exported goods that are on the export declaration. So I suppose that's a bit of information all around the INF3 and the export declaration originally out of the EU. I'll provide all that information in writing to you afterwards as well. And so if I move on to the next point then, on actually just back on that slide, sorry Seamus, yeah, return goods relief can be claimed for goods transported to the UK prior to the end of the transition period, provided all conditions are met and the goods are re-imported to the EU within 3 years of moving to the UK. As an export declaration, INF3 won't exist. Transport documents, if necessary, accompanied by other relevant documents, should serve as proof that the Union goods were taken to the UK prior to the end of the transition period. So I suppose UCC, the article on return goods relief, Article 203 in the UCC, it's it can apply to non-union goods which haven't originally been exported as union goods from the customs territory of the union, if they're returned to that territory within a period of 3 years. Now, if that was strictly applied by the Commission, I suppose goods in the UK before the 31st December 2020 wouldn't qualify for return goods relief because they were never exported from the customs territory of the Union. But in their guidance, the Commission, they've shown some leniency here, and goods which moved to the UK before the 31st of December 2020 and comply with all the conditions of the return goods relief can be re-imported into the EU claiming the relief, and they must be re-imported to Ireland within 3 years of the date they moved to the UK. So there wouldn't be, as we said, there wouldn't be any export declaration, there wouldn't be an INF3, but other documents to prove the movement, such as transport documents or shipping contracts, can be accepted as proof that the goods moved to the UK. And as I said, they have to be back into the EU if you're claiming the relief within 3 years of that movement. Another question, I suppose, from one of the members was about music equipment that was in Ireland and moved to the UK before the 31st of December 2020. So the relief could be claimed when the equipment has been re-imported into Ireland if the applicant can provide proof that the goods moved to the UK and are returning to Ireland within 3 years of the date of that movement to the UK. As I said, shipping, contract, transport documents can be provided to prove that movement. There was also another question about value. It was regarding a case where the UK supplier will have a markup on the original price paid to the EU manufacturer, which they won't want to divulge, and which would probably be, it would be part of the original export declaration or the INF3. Now, I suppose we're considering this at the moment. I suppose that the value, it may be commercially sensitive. It may be possible for the value in the original export declaration to be redacted as the value. It's not a relevant criteria to determine that the goods are return goods or not under the UCC. However, it may need to be considered by customs in some cases. If it could be something that proves or something that we would need to determine if the goods have altered. And also, I suppose, we would need the detail on value on re-importation if a debt has to be raised, if the conditions of the relief weren't applied correctly. So I think this is something we could look at maybe on a case-by-case basis to see what way that could be handled. And I suppose just another point before I finish up is the UCC articles on return goods relief. They don't actually reference origin. So the goods don't have to be EU origin to claim return goods relief. The important thing is that they have EU status. So they have to be in free circulation in the EU before they are exported to a third country and then re-imported to the EU, meeting the conditions of the relief, with the 3-year time period and unaltered. So I think I've covered the majority of the questions that were submitted in advance. That last slide then just gives you information, I suppose, of where to find the details on return goods relief on the Revenue website, and then also the recent e-customs notifications. 14 of 2021 was the movement of goods from the EU to Ireland through the UK, and 24 of 2021 was about return goods relief and movement of motor vehicles. And then that's our unit, the generic email address. If you have any queries or you want to follow up on anything, please feel free to send us an email. There's a high volume of queries coming in at the moment, but we'll get back to you as soon as we possibly can. So I suppose that's a short presentation, and I'm happy. Thanks for listening. I'm happy to take any further questions on return goods relief.
Okay, there's one question here in the chat box. If goods were imported from China into Ireland prior to 2021 and are now going to be exported to the UK, is there any mechanism to allow duty paid to be reclaimed?
They were imported from China, third country, into Ireland before
2021. Yeah.
And now they're going back to the UK.
No, well, no, they were imported from China to Ireland, and now they're going to go from Ireland to the UK.
I think that's just I suppose when they were originally imported from China into Ireland, the duty, and that would have been paid third country goods, and now they're being exported EU goods back out to the UK. So it's a normal export. Yeah. Is it on the duty at the UK side that?
I don't have clarification.
Yeah.
Is there any mechanism to allow duty paid to be reclaimed? I presume it would be the duty paid on the import, but we might get clarification in a few minutes on that question. Okay. Okay, so the clarification on that question is duty for the original import to the EU.
Yeah. Well, no, I would see that as third country goods were imported into the EU, the duty and VAT was paid. Now it's EU goods being exported to the UK, third country. So I wouldn't think there is any mechanism there for, for claiming any relief there. It wouldn't come in under the return goods relief at all.
Okay.
Can I ask a question there, Seamus?
Yeah, go for it.
So Breda, if I understand correctly, what you would recommend is for a UK distributor who's serving Ireland, bringing products from Europe, they should ideally have an INF3 maybe completed at the time of export from Europe, or have a certified export declaration available. And then each time they're shipping to Ireland, they could send that forward as proof for the Irish importer. Would that be the best way to try to operate the model? Yeah,
definitely. The INF3 and the export declaration are the best proofs of export out of the EU. So if either of those can be provided, that is definitely the way to go on claiming the relief. You would be quoting the MRN of the export declaration or the reference number of the INF3 on your re-import declaration. And as I said, look, we're trying to streamline the process, and there's probably going to be a significant amount of these declarations. The majority of the checking will be done in a post-clearance environment, but if requested by customs, you may need to produce it at the point of import. But yeah, we would recommend INF3 or export declaration.
And given that there could be multiple shipments, a photocopy then of each of those documents, I guess, is acceptable because they won't all be originals then.
Yeah, we've clarified that because like the INF3, I suppose every, it have their an individual reference number, each INF3. Now, because of the number of shipments, the only way will be copies. Now, we'll have to keep a reducing balance on that particular, INF3 to show we don't go above the original amount, but copies will have to be acceptable in those cases. It could be like, we would see, I suppose, that maybe a lot of companies, they would be keeping all these details in their records as well, that would be available for revenue to examine in post-clearance and be able to match up INF3s with the reference number to the amount of goods claiming the relief coming back in. But I suppose to answer your question, copies will be acceptable. We need something that will identify that these are the exact goods coming back in, whether it's batch number, serial number, some sort of identifying number. Yeah. But that can be put on the copy INF3, and we keep account of the reducing balance.
Yeah, so, and who would manage that reducing balance? Because you could have different importers dealing with the same distributor in the UK. So not one company here dealing with a single entity in the UK, so they won't have the full picture. I could be importing for somebody, and Pearl could have a customer importing from that same distributor in the UK. So who manages that reducing balance? Will it be customs?
So you're talking about a lot of different importers using the one INF3 to claim the relief.
Because it won't be a one-to-one relationship all the time.
Yeah, that's something actually that's something we're going to have to take away and think about, Tom. There'll have to be some sort of process for ensuring that INF3, the reduced imbalance, that it doesn't go beyond the amount that can be claimed. But we can look at that.
Yeah, and given that a lot of people have had the shock of this duty and weren't expecting it, can they claim it retrospectively now? Can they claim the relief retrospectively for declarations that we have processed, if they can now get the proof that you require, although it may be based on transport documents rather than on export declarations?
Yeah, I suppose really it depends on the timing. If the goods moved, if they were in the UK before the 31st of December,
Yeah.
transport documentation would be acceptable. Anything that has moved, I suppose since, we would be looking for, export declarations or INF3s. And in answer to your question, yeah, the relief can be claimed retrospectively if proofs can be required or can be supplied that all conditions were met. So once those proofs can be supplied to us, the import declarations would be amended and a refund could be claimed under the return goods relief.
And is the process that we just amend the declaration, or do we apply for the relief and then get a permission to amend the declaration?
See, I suppose when you amend the declaration, you'll have at that stage to provide the proofs. So it would only be then when it is accepted that the proofs are enough that the amended declaration and the refund would be processed.
Yeah, so if we have the proof, if we feel we have the proof and we're happy it's correct, we can amend the declaration and then we will get a call then to supply the proof. Yeah.
What I can do is I just confirm with our own resources unit that is the exact process, and I can come back to you in exactly what way it works.
Yeah.
But yeah, once you have the proofs, you can amend and get a refund. But I'll just check what way that should work.
Yeah, lovely. Thanks, Breda.
No problem.
Okay, some more questions here in the chat box. Could it be clarified if transport shipping documents will suffice when no INF3 exists?
I suppose really the transport documentation or shipping contracts, they were suggested as proofs if the goods had moved to the UK prior to the 31st of December. The Commission aren't, they're not accepting that they would be, enough proof afterwards where an export declaration or an INF3 is available. Now, there is an article within the UCC that says that, if customs are happy that we have enough proof, that, without doubt the goods were exported out of the EU and, comply with all the conditions, we don't have to get the INF3 or the export declaration. But it's proven difficult to find something that without a doubt proves that. The Commission even mentioned at a recent meeting, like even a ticket or a ferry ticket or that isn't enough proof because they may not have gone on the ferry. They seem to be kind of very adamant that we have to be 100% sure that the goods did actually move. So I don't think the transport documentation would be enough. Look, we're dealing, I suppose we're meeting with a lot of companies on this relief. And, if a company has a particular proposal, we're quite willing to look at it and see, do the proofs meet the requirements? But I couldn't say for definite generally the transport documentation would.
Can I just add to that, Breda? Thanks. Whatever proof then would be given, the onus would be on us then just to pass that by the Commission just to ensure that they are happy with it, because from our point of view, if they select that import declaration for audit themselves when they visit us, we would have to have the proofs that they require. So we just have to ensure that. But I also say, in relation to the INF3, while we're looking for proofs in relation to it, if there is documentation, you're talking about decreasing balances. If when you look at the documentation, you're satisfied that there's proof on it that these goods have moved from the EU to the UK, like once you're at that stage, well then that should provide enough information for us, when we're talking about the INF3 or supporting documentation. So I think if you just keep that in your mind while even on the official INF3, if there's proof on that, that you're happy, that shows the movement of the goods, that's really what we're looking for, is to show the actual movement of them to the UK and the date, because the 3 years start from that date.
Okay, thank you. Next question is kind of looking for clarification on the legal entity status. So does the EU entity have to be the same? Example of goods being exported from NL to GB, then re-imported into Ireland using the NL ERI number, or do they use the Irish ERI number?
Goods they're exported from Northern Ireland to GB and then going back.
Say Netherlands to GB.
Oh, sorry.
Yeah. And
Netherlands to GB and back into Ireland. It actually, it depends on the setup of the company, the legal status, if they are two separate legal entities or not. It varies. So I think we'd have to look at, I suppose, if the company can provide information on the setup, you know, to prove that they are the one legal entity, then the VAT relief could apply. But it's difficult to, I suppose, to comment on an individual case like that unless we have the details. Again, we would probably be looking for a bit of advice from our VAT unit as well on that particular case. So if the details, if your member wants to send in the details to us, we can check out the position, and I suppose we just need the information on the legal status of both companies.
Okay, fair enough. Yeah. Okay. Next one: if goods are exported from Ireland to the UK with one commodity code to be galvanized or other processes, do we have to use the same commodity code once re-imported?
So the goods are moving from Ireland to the UK, and they're being processed, is it? Was that?
Yes. Yeah.
Yeah. You see, under return goods relief, the goods can't leave the EU to be processed. You'd be looking at a different procedure there. You'd probably be looking at outward processing. Like the goods can't leave to be processed or repaired. As I said, I suppose if they break down while they're in the third country, they can be repaired to be brought back to the same condition as when they left the EU, but they can't be coming back in a better condition.
Yeah.
So I think you're looking at goods can move from here to the UK under the outward processing, and under the trade agreement now, duty and VAT can be exempted when they're coming back in. So I mean, there is another way of, I suppose, doing that process. Again, we deal with outward processing. So if you're the member there wants to send in more details, we can find more information on that as well.
Okay, sound. Okay, another kind of question, kind of going over similar ground. A mixture of goods from various EU goods were stocked in the UK before New Year's Eve 2020. If we have proof that the goods were transported from an EU country to the UK, could we use it to claim relief, if I understand this correctly? So you prove that the goods are transported.
So these goods are, the goods are in the UK before the 31st of December 2020. So really then, if they're being re-imported back into Ireland, we'd be looking, for transport documentation or shipping contracts, something to prove that the goods moved, and just to be conscious that the timeline is 3 years from the date they moved from the EU into the UK. But the relief could be claimed if you can provide those proofs, stay within the timeline, and show the goods were unaltered.
Okay, Sam, thank you. And they also asked if you could just mention once more what the AIS procedure they should be using is.
The AIS procedure, like the declaration procedure, is it?
Correct, yeah.
Yeah, as I said, now this is all on the Revenue website, but the procedure code is like when the goods are being exported out of the EU, and if the exporter knows at that stage that's a temporary export, they would use code 23, which is temporary export. But in a lot of cases, they don't know what's going to be coming back in, so they don't know it's going to be a temporary export. So procedure code either 6123, which is re-importation into the EU after temporary export, or 6110, which is re-importation into the EU after permanent export. So that would be put in data element 110 on the AIS. And then the additional procedure code F01 if it's just customs duty relief, or F05 if it's customs duty and VAT relief. And that's entered at data element 111 on AIS. And then finally, you enter code 1Q27. And after that, you would put the MRN of the export declaration out of the EU, or the reference number of the INF3, whichever proofs you're using. And that's in data element 23 of AIS.
Okay.
It was AIS you asked about, wasn't it? Yeah, it wasn't AEP. Yeah.
No, you are correct. Yeah, very good.
Yeah.
Okay. Not so much a question, more of a comment really. The necessary return goods relief proof will impose significant administrative burdens on importers in trying to get their MRN of the original export or INF3 from the UK entity. I suppose that's the reality of the situation then, really.
Yeah. I mean, we know, as I said at the beginning, this relief was never intended for these volumes and frequency of movements, and this is the condition of the relief, and it is difficult probably for some companies to provide these. The only thing, maybe in a post-clearance environment, it might give the companies a bit more time to have the information available and ready, but we have to have proof that the goods left the EU and coming back in for this relief. You know, it's an exemption of duty and VAT, so we have to be very careful that the proof is available.
Yeah,
we understand from talking to companies it is a burden, and I suppose some companies are able, as I said, they're able to track. It depends on, like, that's probably a different business model. Some companies are able to track, they can see the movement into the distribution centre in the UK and coming back out over, you know, back into Ireland. So they literally can track the goods the whole way. But then you have different models where goods are sold on in the UK and are coming in, you know, from different importers, you know, as Tom said earlier. So it's difficult in those circumstances. Yeah.
Yeah. Okay. That's fair. Okay. One here. So under return goods relief, go on the example of a banned equipment, but the owners have no proof of export, but are returning their own equipment. They provide as much documentation proof backup as possible. Do we apply for ad hoc relief on per job basis in advance of the movement? So this is a company returning their own gear, but they don't have any proof of having moved it previously.
Well, I suppose if they could provide any sort of documentation to us, if there's something to show the equipment moving, like this is the equipment moved from Ireland over to the UK. So, I mean, if they've any sort of transportation document to show that it moved, we would need something, I suppose, to show that the equipment was originally here and went to the UK. So anything that they can provide to show us that, we could, you know, we could consider it. I take it that movement took place, I suppose, yeah, before the end of December last year. So they may have some sort of proof that they could just show us that the equipment moved over.
Okay, cool. On that point there, do we need to include a corresponding invoice or packing list from the original EU export as well as the export SAT?
Well, for claiming the return goods relief, that isn't required. I mean, for the relief, it's the export SAT or INF3.
Job. Okay, long one here. What if goods are not serialized or batch identified? An importer with thousands of parts per day coming from EU into the UK, into a DC, subsequently 10% of them come into Ireland, but it's not known at time of export which ones will come into Ireland.
Yeah, I mean, we put that particular question to the Commission, you know, I think it's called FIFO, first in, first out, you know, if it's the same CN code, the same goods, you know, can that apply, can the return goods relief apply? You know, it might not be the exact same product, but it's the same CN code goods coming back in. But the response on that is we have to have proof that it's exact goods that left the EU that's coming back into Ireland. So really there needs to be some sort of identifier. like different companies seem to have different ways of doing that. You know, it doesn't have to be serial numbers, whether it's some sort of batch or something. We have to know that it's the same goods coming back in. So we would need to have some sort of identifier there.
Fair enough. I think I got most of the questions there. If anybody else has any questions would like to freely voice themselves, please go ahead. I don't think I missed anything. Oh, here, sorry, I did miss one here. If I send some empty pallets to the UK, I know they're going to come, and I know they will come back empty to Ireland. Should I use an INF3 when I do the export?
So you're sending empty pallets to the UK and they're coming back empty as well?
Correct. Do they need to use an INF3 when they do the export?
Now, there is another procedure for empty packaging by oral declaration. If your member wants to have a look on the Revenue website, if this is something that you're doing on a regular basis, you can get an oral declaration authorization. So you wouldn't actually need to be doing, if it's the same pallets going over and back all the time, you know, you wouldn't need to be doing the export declaration or INF3. So again, if you want to have a look at the Revenue website, it's actually under reliefs. It's within the same area as return goods relief, but it's just an easier process by oral declaration. Or if you want to send us an email outlining exactly what you're doing, we can advise you. But I don't think this would be necessary in that case.
Hi, Breda. It's Dermot from DHL here.
Hi.
We've used an oral declaration, or we have a client who submitted an oral declaration, and they were rejected for pallets. They are accepted for things like cages, kegs, stillages, you know, other plastic totes and things like that.
Okay.
Wooden pallets have been rejected for inclusion in that oral declaration process.
I'll have to take a look at that, Dermot, and see what is the situation then with the pallets. See, I thought maybe the sole act of crossing the border, but can you leave it with me, Dermot? Maybe if you want to send me a quick email and I can come back to you on that.
Sorry, I don't have a query. I was just explaining that we did have pushback on pallets when our client applied for that authorization under the oral declaration, but they did receive their approval for other means of handling, other things like cages and kegs and totes. They were all approved. It was just the pallets, we were told, couldn't be included in the oral declaration process. So I don't have an issue. Your other caller, I think, has the issue.
I'm just wondering, Breda, is that something got to do with SPS checks with wood coming in that agriculture may need to be advised? I'm not sure, but we can check that out for you.
Yeah, we have some, maybe pallets is different. I need to check into that. We definitely have some wood packaging. We've a way of identifying, you know, that it is wood, so that agriculture are aware of it. But maybe there is something just a bit different with pallets, so I can check that out. Yeah.
Okay. Here's what I missed earlier. The case of a company that has exported film costumes to the UK in December and wants to re-import them back to Dublin. Please advise the re-import process so we don't have to pay import duties and VAT. I suppose that's already.
Yeah, I suppose that is one where return goods relief could apply once you can provide proof that the goods moved to the UK. You will be doing your import declaration with those codes and have your proof ready just in case it's requested.
Gotcha. Yeah, that's
you
fair.
don't need a transport documentation or something showing the movement.
Okay, very good. Okay. I think we're fairly okay there. Any other questions from anybody else like to voice up?
I just had one in relation to, are there any AEO benefits or simplifications around RGR?
Well, I suppose the only thing we could look at is for AEOs that perhaps I suppose it's not definite, but perhaps all the checking could be done in a post-clearance environment, which gives the company more time, to have the INF3s or export declarations. But we can look at accommodating AEOs in that kind of way.
Yeah, because I mean, it seems to be a particular problem in particular sectors around automotive and distribution. It would seem to be, ideally geared towards particular importers, if you like, that follow that model, that there would be, if they were AEO approved, that there would be a case for some easements or simplifications around that process. In a lot of cases, they will have the paperwork to substantiate it, but it would be quite literally reams of paperwork traveling with the driver, loads of INF3s and export declarations to cover all of the goods that would subsequently be moving into Ireland.
Yeah, no, we definitely looking at some sort of easement for AEO status, and like that, I mean, obviously, if a company's AEO status and their records and everything, have been monitored and checked and are up to standard. So I mean, likewise for return goods relief, there should be a way that the checking can be done all in post clearance, and it's something we're just looking at the moment as well.
Okay, all right, thanks, Rita.
Okay.
I'll just come in again, Breda.
Yeah.
Obviously, there is a burden of proof there that these goods have rested in the UK for a period and now come to Ireland. I assume there are penalties then for any declarations that would be made which maybe aren't compliant, where they may be made mistakenly or not. Obviously, it's very important for us when an importer tells us that these are return goods, that we have that proof or have reasonable belief that that proof is available. But there may be a situation where an importer then may feel, well, if this company doesn't cooperate with me, I might go elsewhere to find somebody that will cooperate with me. So I assume there are penalties involved if a misdeclaration or an incorrect declaration is made either intentionally or unintentionally. Yeah,
I mean, it'd be the same types of penalties, Tom, I suppose, as with any other, if misdeclarations, the debt will be raised, to be administrative penalties. So it'd be the same process there as any other misdeclarations, or if other procedures aren't being adhered to. So that would be the case with this as well. And especially, I mean, the Commission has stressed, I suppose, that the exemption of duty, it's an exceptional measure. So we have to be quite strict in ensuring that the conditions are met.
Yeah, we're really trying to make this trying to shoehorn this into a solution that was never intended to be, because it wasn't anticipated that this type of trade would fall out as a result of Brexit. And we, again, are the most disenfranchised in Ireland, because you won't have the same level of setup in mainland Europe where you would have a distributor acting on behalf of a Dutch company, because why would they send it to the UK to send it back out? We, unfortunately, because of the size of our market and our geographical location, we suffer from this more than anybody. But the market should not see this as a solution unless they can prove. So we must stand up to any pressure from customers that may come our way to say, no, unless you can prove it got into the UK, then we cannot make a declaration on the belief, but we must have the proof, and we need to stand firm on that.
Exactly. Yeah, I agree with you totally, Tom. Yeah.
Could I just add just a couple of points on that? The first one is that e-customs notification that Breda mentioned earlier, that number 14 of 2021, that deals with all the scenarios involved in using distribution centres in the UK, and the advantages of obviously direct transport from the EU to Ireland, or using transit, or using inward processing, or using returned goods relief. So that e-customs notification goes through all those scenarios for you and provides a lot of information. Just in relation to, like I mentioned earlier, just in my intro, in relation to the presumption of honesty here, but also where there are wrong declarations made out, obviously it would be considered to be fraud, and we would be looking at the end game, like that could result in seizure of the goods. But I have to say that that's where fraud is proven. But at these early stages, we're certainly going to work with the trade, with yourselves, to ensure that everything is done properly, that you understand what return to goods relief is all about. And as I say, we'll work with you on that. But where it's found in a post-clearance situation, post-clearance check, that something was done fraudulently, well then the legislation will kick in there in relation to that.
Okay, one final point here. What about shipments that go from Turkey to distribution centres in the UK and then onward to Ireland?
Yeah, the return goods relief can't apply there. We've actually been asked that a few times, and we got clarification on it. So from Turkey to UK to EU, the return goods relief can't apply.
Okay, fair enough. Okay, that's our chat box empty. Unless anybody else has any final questions, I think we're good to finish our lunch. Yeah, I'd say we're okay. Okay, well look, Declan and Brita, thank you very much for your time today and for providing some very useful and practical information for everybody. Very good help for sure. And for the members, yes, the recording of the session will be made available by the end of today by email. Yeah.
Thanks, Brita and Declan.
Great, thanks very much.
Thanks, Paul. Thanks, man.
Thanks. Thanks very much.
Bye.
Thank you. Cheers.
Thank you.
Okay.
Thank you.
Cheers. Bye-bye.